All right, I believe we are live. Hello, everyone. So welcome to our very first hot topic. My name is Nani Saldana, and my pronouns are he, him, his. I'm going to be your host for today's hot topic, which is cryptocurrency. I'm a student event planner here at MSU Denver, which is part of the tri-institutional events team between MSU Denver, CCD, and CU Denver. Joining us today are our three faculty members discussing about cryptocurrency. You know, we are lucky enough to have our panelist, which is Dr. Yosef Bonaparte, Dr. Ray Hernandez, and Dr. Tom Brady, who will be introducing themselves here in just a minute. We have some questions already kind of set to ask them here in a little bit, but we will be also accepting questions from you, the audience, throughout the event. So you guys will be able to submit your guys' questions in order to ask the panelists in the comment section down below. So now, without further ado, we're going to get the panelists to introduce themselves. So if any of the three panelists would like to introduce themselves really quick.
Hello, my name is Tom Brady. I recently joined the University of Colorado Denver Business School a little over a year ago. I'm the executive director of the JP Morgan Center for Commodities, and we're a part of the business school where students come in and learn the production side all the way to the trading floor for various commodities, whether it's agricultural commodities, mining commodities, as well as energy. Thank you.
Sweet, thank you.
I'm Ray Hernandez. I'm a professor of economics and finance at MSU Denver. I teach courses in our personal finance program and in banking as well.
I'm Yosef Bonaparte, associate professor in finance, and my expertise in behavioral finance and asset pricing. And I teach trading classes, behavioral finance classes.
Thank you guys so much for introducing your guys' selves. So we're just gonna start with some questions that our team has already prepared for you guys. We're just kind of give you guys like around 2 to 5 minutes per questions. I'm gonna ask the panelists to feel free as you see fit around your expertise around the questions I'm about to ask you guys. So I'm going to ask each panelist a question like individually, and so they can answer for themselves. So we're going to start first with Dr. Ray Hernandez. So what do you think is cryptocurrency? What's the purpose of cryptocurrency?
All right. So I think I take a step back at the question and think about like, what is currency? So currency is typically something we use to engage in trade and to use as a store of value and a way to measure worth. So if you think of the dollar, you use a dollar as a product, as a piece of paper or as a number that you have in an account that you would trade for someone else for them to give you something that you want. Right? So cryptocurrency is partly something that serves that role because it is a store of value in a similar way as a dollar might be a store of value. It's something that you can say like, this is a way to measure some, but unlike a typical kind of currency, which would be like a dollar, it's very difficult to use for typical everyday transactions.
Like, you think like anyone could just like obtain this type of cryptocurrency around the world? Because I know like not too long ago, India, banned cryptocurrency. Or not necessarily cryptocurrency, but so I know something, regarding India, they banned something.
So some access to cryptocurrency can be limited, but it works very differently than physical currencies in lots of ways. There's no actual piece of paper that you can actually hold. Instead, it's just a database tracks who owns what. And instead of it being, held physically, it's held virtually.
Sweet, thank you. With that being said, kind of follows the question that my next question, which I'm going to ask Dr. Yosef. What are there different types of cryptocurrencies? What are the different types of cryptocurrencies?
Right. First, thank you everybody for having me for this event, and I think it's very important to learn a little bit about cryptocurrency. So cryptocurrency, I just want to add what Ray just said. It's a way of thinking about it as a digital wallet. It's a digital wallet, but the difference between it's and the dollar, it's the dollar is a paper and you have to have a bank account. Cryptocurrency is a digital. So the delivery of cryptocurrency, like how to reach it, is called blockchain. Blockchain is a delivery. And your question is important questions. How many blockchain we have? We have a lot of blockchain, unlimited. So you can also have a blockchain for you, Manny. You can call it the Manny blockchain, and that will help you to have a digital wallet for your followers. So there are many of them, and in the retail, Overstock has some. In the business, we have a different type of blockchain that end up to be a cryptocurrency.
Yeah, Yosef, I read recently there's about 4,000 different digital currencies out there right now. The top five, Bitcoin, which everybody's heard of, Ethereum, XRP, Tether, and Litecoin. That represents about 80% of the current market capitalization. So it's most of it's dominated by those top five, but there's 4,000 of them out there.
Yep.
So,
and you can create yours if you want, and that's you know what, this is a great question. I like it. How many do we have, and how many we need also, which could be another question. So $1 for all America. We don't have more than a currency that dollar. If you want to use the Canadian dollar, you're gonna have a problem. You cannot shop. So that's another thing. Like we have a lot of cryptocurrency when the idea was to have one currency for entire world. Now we go into the friction. We have a different cryptocurrency. So that's another problem. Down the horizon, we're going to talk about it.
Yeah, like what kind of caught my attention, like anyone could create the cryptocurrency. With that being said, recently with the case of Robinhood, I think that's what it was called, where you could invest, and then recently, you weren't able to invest in certain like stocks. I believe, I'm not too sure what was the case in that within that.
Well, that's a great question. And we before the meeting in the green room, we were talking about what's even harder than cryptocurrency and the GameStop story with the Robinhood. So again, we talk about delivery, and Robinhood, it's a delivery product. It's a vehicle that helps you to invest. What makes Robinhood different than others is two things. Number one, the simplicity of Robinhood. It's a better delivery than Schwab or JP Morgan or other. And second, you can buy a fraction of the assets. Like you didn't need to buy the entire Bitcoin, which is a 32,000. You can buy a fraction of the Bitcoin. That gives Robinhood advantage. Now, what Robinhood did, and they're gonna be sued about that, is they did not allow investors to trade certain type of stocks that highly volatile, and investors enjoy volatility because this is the time you make money. Now, the SEC put the rules. The Security Exchange Commission put the rules, which one be traded, which one not be traded. The Robinhood should offer all their assets to everybody, unless the SEC said to Robinhood, don't list that in the trading platform. So what the Robinhood did, they make themselves the SEC, and then they're in trouble of that. You cannot put yourself to be the SEC. And in my newsletter that I published last Friday, I said this is a time to regulate the fintech business. It's a fintech. Robinhood is a fintech. It's a delivery. So this is the time to regulate the fintech business. And that's, again, to your question, how many Bitcoin we have? This is a time also to regulate the Bitcoin business. That's a great question.
Kind of with that being said, I guess you could say there are a lot of, I guess you say, risk. I don't know if Dr. Tom can kind of expand on that. Are there any risks we have in cryptocurrency?
Yeah, a lot of risks with cryptocurrencies, and Ray talked about, cryptocurrencies seek to be some form of money. It's a medium of exchange. The problem with that piece of it is that, for example, if everybody that has a Visa card, Visa can process about 1,700 transactions per second. So it's easy to go in and buy and sell things, and using a credit card. That's with Visa as the central as kind of the central repository for that transaction. Currently, like Bitcoin, they can only process less than 4. So it really makes that transaction, that medium of exchange, very difficult with the thing like, and the reason why is as Yosef said, it's the blockchain. It's very difficult to verify transactions through this distributed ledger, which is the backbone of what cryptocurrencies have. So you have that. It's also very, very volatile. So that store of value piece that it seeks to have. So for example, over the last 10 years, Bitcoin's monthly price volatility, how much it's moving, has ranged from 50 to 30%. So just imagine if it's 10% volatility, right now it's around $38,000 for a Bitcoin. With that kind of volatility, you could go back in very short order, and could be 10% lower very quickly. So most people that are looking to have a store of value can't handle that kind of volatility with their investment portfolio and all that. So I argue that because it doesn't really satisfy the aspects of money, you can't transact with it easily. It's not a good store of value. It's really just a speculative asset. So, there's other things, there's also, from a user standpoint, it's susceptible to, hardware or software attacks. There was an example back in 2014. There was where one of the exchanges lost 850,000 Bitcoins, just like that. So the problem is that you don't have a bank or a Visa to go back and, hey, something's gone wrong with my credit card. You don't have that entity to go back to. So that's just, one of the things that's pretty scary, that you could lose this through cyber attacks and other malicious things that could go on. So.
Great, thank you. Kind of bouncing off that, a question for all three of the panelists. The CEO of Webull, Anthony Denier, I believe that's how you pronounce it, believes crypto will surge by the end of 2021, saying young people will believe in its value, saying why is gold more valuable than silver? It's not like we use gold to build buildings. It's just that someone a long time ago said, its metal is really valuable and I want it. And everyone jumped on board saying believing gold has this amazing value, he said. So it's a collective consciousness. Same thing with Bitcoin. It's a collective consciousness where people say, yes, that's a value. There's value to it. What do you think, about the notion of young people's collective consciousness being the driving force of the crypto increasing value?
So I think one thing about that comment that's valuable is that cryptocurrencies there are being compared to gold and silver instead of things like dollars and pesos and euros. Because in many ways, the way that cryptocurrency is used is more like a commodity or an investment asset than like an actual currency, since it's so difficult to use it for actual transactions. And the point that's being made there, it's gold is often used as something that's valuable, that stores its value really well, and something that you can put your money in, and many people are big believers in gold as a valuable commodity and silver and so on. And of course, part of the reason these are valuable is because when we know that if we ever want to sell our gold in the future, there is expected to be demand for that asset again in the future. And our trust that people will value it in the future is what makes so many value it now. But gold and silver weren't like arbitrarily chosen as metals to fulfill these roles. Because it could have been tin and it could have been lead, but those wouldn't work quite as well, largely because the supply of gold was so restricted that you would believe that it's not like someone's going to show up tomorrow with a bunch of new gold and now your gold becomes worthless. The fact that gold and silver are so much harder to find, than other metals is part of what gave them their value and part of what established their place in history that way. And kind of Bitcoin and other cryptocurrencies replicate that. The cryptocurrency, only a little bit can be added at a time. And the more of it is found, the harder it is to find more, which is part of the reason that individuals believe that is going to continue to be valuable, because there's no way that the market is going to be flooded with a whole bunch of new crypto.
And just from my experience in the gold business, I would disagree with the CEO's statement there of Webull. Again, there's with gold, like a lot of commodity, there's a real physical aspect to it. There's a physical quantity, a physical measure. So, for example, and gold is incredibly rare. So, if you think of all the history of mining that's gone on the earth, last 7,000 years, for example, all the gold that's ever been mined over that 7,000 years could fit into 2 Olympic swimming pools. That's it. If you think about all the gold in Fort Knox, gold on people's rings, in jewelry. And there's also a physical use of gold and silver. Silver goes into a lot of solar panels. Gold goes into a lot of jewelry. So it's used as a store of wealth in countries like India, for example, where there's not a really mature banking system, so people don't trust putting their money into banks and things like that. So, typically farmers in India, rural, that don't have access to good banking systems, will store their wealth in gold jewelry. So I think there's more of a use thing, a physical use, and the absolute rarity of a commodity like gold, which is much more rare than silver, and thus the price difference that's been over time. So that's just one point that I'll bring up. I'll leave it at that right now.
And similarly, like why do we value a dollar? Largely it's because we expect that if we ever want to spend that dollar, other people will value it. And if you didn't think that other people would accept the dollar when you were going to want to spend it, you wouldn't accept it as a form of payment either. Right? So this people's collective consciousness as a thing that creates a value in a currency isn't unique to cryptocurrencies, and it's true with every currency.
No, I don't know if Yosef, you have anything more to add to that.
I think Tom Brady and Ray have a very good insight about gold and how it's valued, which is what Tom and Ray said. In the countries we have inflation, people tend to have a commodity like gold, some places sugar. So that's a value for it.
And just to kind of build on what Ray said, it's gold and cryptocurrencies are similar, as are commodities. By you investing in a Bitcoin or an ounce of gold, for example, you're not going to get an interest rate like you would with a bond. You're not going to get a dividend like if you own a certain stock equity. So it's just kind of what the return you get is what you paid for it when you bought it, what you sell it for. Did you make money? Did you lose money? That's kind of the return you get on that kind of asset.
Yeah, which is why when people speak of the exchange rate of Bitcoin to dollars, I think we should just call it a price instead of an exchange rate, because it really isn't a currency in the sense that most currencies are.
Just want to add something here, a little bit different, maybe a little bit different than the question. The value of Bitcoin now in the $32,000, $33,000. The Bitcoin itself as a gold, it's much less than that. So it's not the gold or a silver or whatever is that the paper. Like the American dollar paper is cheaper than a dollar. There are agreement between people that this is valuable. The agreement that there are some people willing to buy it, that's a value. So that takes us to the bigger picture, from where the value of Bitcoin come. That's one reason I was hesitant to answer and was waiting for the next question. From where the value of Bitcoin comes, it's not from being a gold. It's been from the traders in the market, in the floor, who buy Bitcoin and who sell Bitcoin. So what type of traders we have? We have two types of traders. Number one is retail. Retail, which is me and you and all the people in the Zoom, probably they're retail, small investors. And then you have the institutional traders, which is like PayPal is one of them. Could be other companies, but PayPal, in the last recent run for Bitcoin, PayPal fingers were there. And today PayPal report their earnings and they beat expectation, PayPal. And the price of PayPal was at some point 9% up today, PayPal, when they report their earnings. So they did very well this quarter, PayPal. So we have to be careful, not the gold itself add the value, it's the traders who agree on this value.
Great, thank you. So now we're going to take a quick pause from our set of questions and go to some audience questions. You know, anyone feel free to answer the question. So Summer has a follow-up question to the part of the conversation we had earlier. So many versions of cryptocurrencies, you know, how are they regulated, you know, or are they regulated, and how are they legal?
Well, it's that decentralized piece. So, you know, most credit cards, you know, Citibank is going to have that ledger. It's going to be a centralized ledger of all the transactions. With the digital currency, it's all that ledger recording all the transactions. You know, I sell a card to Yosef, for example. That can be recorded. He pays me in Bitcoins. That can be recorded in that ledger. Now that ledger recording all that is distributed across hundreds, thousands of computers. There's no central entity. So, and again, if some problem with that transaction goes through, I might not even know who Yosef is. You know, I can't go back to him and go, hey, this didn't, this transaction didn't work. You didn't pay me enough or anything. So there's just that problem of that. You don't have that central entity to help organize and you know, if things go wrong, to help clean things up. I don't know, Brave, Yosef, if you have any other things to add?
Yeah, so I mentioned early about regulation for the fintech after Robinhood, and I just read today Pelosi and other Democrat want to go and regulate the fintech. When you're going to touch the fintech, you're going to touch the cryptocurrency, definitely. That's a great question. By her name is what's her name? What's her name? Summer. Yeah, she asked a spectacular question, and this is important one. Now we have a new Congress, a new president. So the question is, what is regulation and what to regulate, and whether it's regulation good or not? So her question is spectacular, very smart, obviously. So what is that regulation? Regulation usually to protect the environment. We need to regulate that. So we can say you cannot do this, you can do this, you can do this at this level, you can do this to that level. So regulations to protect the environment of trading. So traders, investors can have a safe environment to go and save and invest and be part of that. So that's what they need for regulation. What to regulate here, specific here, is laundry money, number one. Laundry money, drugs dealers, women trafficking, all these people can go and take their money, put them there, make some profit, get out from there and say, hey, look at me, I'm an investor. I'm not a drug dealer. So this is number one regulation. And I have a good relationship with the congressman from Texas, when I was in Texas there. And I sent him that we want to regulate, make sure that laundry money not to go to Bitcoin or any other places. That's number one, because we don't want to have thieves and criminals in the business of Bitcoin. So that's number one. Number two, losses. We need to make sure to have a stop losses. We didn't want people who have all their life in saving, parents, and have all their life saving for their kids to go to college, and one day, snap, you go 50%. So we have in the stock market 8% stop. When the stock market going 8% below 8%, the market close. Close for the circuit for
Circuit
8
breaker.
minutes. Yeah, do you know 10 minutes or 15?
Something that
Sure.
there's just a pause that just if the markets get too frenzied.
Yeah, so 10 to 15 minutes, they stop the market and they call the traders, because keep in your mind, a lot of tradings are through computers. So they call the traders, go shut down your trading machines and they reset it to the new data. We didn't have that in Bitcoin. We didn't have that. So we need to protect families who save all their life saving, put in Bitcoin to make sure that they're not going to lose all of their saving in one day. So that's something. Now, I'm a libertarian. I like small government. But some regulation like this, I would accept, I would tolerate, because I don't want people to lose money, and something you have to protect here. So summary question is a spectacular question, and I think the dialogue just to start this Congress gonna start dealing with that, and Robinhood helped us by doing the mistake that they did.
Actually, I have other questions from the audience. So the question is, did the COVID-19 lockdown affect the fluency of cryptocurrency?
Did it impact the what, Manny?
The fluency.
Fluency of. Well, I think honestly, it's probably, one thing's about, like we're all on now, we're all working and studying, taking classes online. Maybe we're not commuting, sitting in cars as much as we used to, or on the bus or train. So there's a lot more time to, and we're probably saving some money. We're not going out as much. And I think there's just a lot more interest in staring at the market, hearing stories that, wow, there's this company called GameStop. I don't even know what they do, but I'm going to invest in them.
Computer games.
And you could see that probably happening with cryptocurrencies too. It's just like, there was a pretty good rise over the last year, went up to over $40,000. Now it's kind of dropped down a bit, but it's still at $38,000. And I don't have a chart of what exactly it was at the beginning of the year, but it's just
they have around the 750% since the pandemic.
So.
Great. Also, Kylie from the audience has a question for Dr. Ray. She says, going off Dr. Ray Hernandez-Julian's comment about value, do you think the value of cryptocurrency will increase over time and mean more in the future?
So here's the thing when you think about a price of an asset like the price of Bitcoin right now. So the price is set by someone is willing to sell at that price and someone is willing to buy at that price. So the two people who are trading the asset at that price have a fundamental disagreement in its value. So there's people who think it's worth more and there's people who think it's worth less, right? So then there's people out there who think that the price is going to go up in the future, then they're going to pay more for it now and drive the price up today. So kind of like the price that Bitcoin has right now is kind of the price where people expect it should be. And unless there's some new information or something that's a shock or something that's a change, we kind of think that price is the price that it should be. Now, Bitcoin's super volatile, right? So Bitcoin is super responsive to any change or to any new information, which is why the price moves around so much. So I think it's impossible to predict what the price was going to be, because if we knew that the price was going to go down in the future, then it would just go down now. So that's kind of like a thing that we can't know, and any price change is kind of a surprise. That said, I think these assets for me is like I'm coming to this partly from like a personal finance background in a lot of things, unlike the other two panelists. So I just am like, people are looking at this and thinking like, oh, can I make money using this? Oh, I want to put money in this because I want it to make money for me. Putting all of your investment in one asset is super, super risky. Same thing with like everyone's like GameStop, let's buy GameStop and make money. And this is kind of my big problem with Robinhood. Robinhood, by allowing you to buy fractional shares, is really encouraging individuals to invest in one company. When we know that in the long run, the best thing you can do is to spread out your investment through the market. And I could go on and on about index funds, but maybe we should do that in a different hot topic.
Definitely. I know Dr. Yosef would want to share something real quick if he wants to share his screen.
This is a spectacular question by the students. What determines the price? Is the price going to go up or down? I have a paper about cryptocurrency. I want to share it with you, which says when to buy and when to sell Bitcoin. So I have a paper there, and I want to show you something called the secret sauce. Before I share this, I want you to understand here. Bitcoin is not a company. Like today, PayPal report their earnings, how much profit they have, revenue, and income. Bitcoin is not a company that they report quarterly. They don't have that. It's not a company. So this is a different setup market than equity or bonds or something like that. So what's the equivalent in Bitcoin to company earnings or profit? What's the profit for Apple? We see that every 3 months. But for Bitcoin, what is the equivalent of a profit? The closest thing you can get is this, called halving. Halving, H-A-L-V-I-N-G. Sorry, I have accent here. H-A-L-V-I-N-G. This is the earning season for Bitcoin. And we have a very good run because in May, we had a halving, and this is the data for that. The next run is going to be 2024. We're going to have another run because another halving, it's expected here. So the future for Bitcoin is going to be very volatile. And I wrote an article about that. It has to do also with distraction in the stock market. There is a parameter called distraction in the stock market, how much investors are distracted. The more they are distracted, the more the Bitcoin price going up. So with the more people focus on the stock market, the less attention for Bitcoin. So the key thing to understand here is, if you want to know whether to buy or not, is Bitcoin is not a company with earnings, and the investor's distraction in the market impact the price of Bitcoin.
I would just be prepared if you're going to invest in something that's a speculative asset, be prepared to lose. Don't expect it's just going to go up, because speculative assets have happened historically, whether it was the tulip bubble of the 1600s, that was in the Netherlands, just investing in tulips. That was just a craze that a bubble created. Same thing that happened here a little over 20 years ago when it was called the .com bubble. All these new tech companies started, and people were investing in shares, and all they did is go up until they didn't. So I just would caution on anything, whether you're seeing it, if it's a GameStop stock or something like a cryptocurrency that aggressively increases. If you look at the price history of Bitcoin, it's gone up radically on numbers of occasions, but it's also decreased radically. So
we have another question from the audience. Let's see. Christian asks, what's going on with Dogcoin, and what should I do, or how should I educate myself?
Dogcoin, I think, so that's just one of those.
Yeah, it's one of the
traded. I think, with a lot of these different currencies, they just have some of them have a different underlying structure. When we talked about blockchain and all that, they might have a different algorithm of how things, how transactions are recorded, or how new coins are minted. As with all this, I would really try to just, with any of these cryptocurrencies, I would just try to learn as much as you can about, really study trends of where prices are going, study how the underlying structure works, study the risks. For example, I think it was a guy over in England, threw his computer out, and it ended up having like 20,000 Bitcoins on it. This was like 5 or 8 years ago. And, he was hunting around some city trash dump trying to find his computer, never did. But really just understand the risks. For example, can they dilute that currency? You say you invested in it and then they issue a whole bunch new dog coins, for example. Is that going to cause automatically your value of the one that you bought or to go down by half, for example? So it's just things like that just really, if you're investing in options through Robinhood, understand what drives an option, understand understand the company that you're investing in an option. Just kind of standard. And I'm sure Ray teaches this a lot in his classes, just understanding what you're investing in. So.
Or honestly, like I would probably teach, for the most part, don't even bother trying to understand what you're investing in and buy an index fund. But so instead of trying to figure out what asset is going to make money and what asset isn't going to make money, buy a little bit of all of the things that are out there. So instead of saying, I'm going to buy Bitcoin instead of Ether, you would just, buy a little bit of both. Or, instead of saying, I'm going to buy stock in GameStop and I'm going to buy stock in Ford, you split your money and you buy a little bit of all of the opportunities out there so that no matter what happens, on average, you do the average. Even if you don't beat the average, you never do worse.
Yeah, I just want to echo both of them, volatility. So every asset has a potential to go up and down, but you have to see the volatility. Volatility means risk, how much risk you can take, and then to see the trade-off for risk return if that's what you're looking at. Now, diversification, the point that Ray mentioned about it, it's a little bit tricky recently. When the market crashed in March, which is less than a year ago, all the stock market went down, all the companies, the banks, the retail, all of them. So there is no really diversification in the market. When the market going down, all going down, and I was looking to the prices today, the market is up, mostly all up. So there is no diversification because there is the aggregate component that going together and going down. And the reason the market today up because the stimulus that Democrats want to pass in the Congress without the bipartisan Republicans. So then you go back to your question is to buy Bitcoin. So if you buy a stock for Apple as an alternative, an option, Apple versus Bitcoin, in a heartbeat, I would say go buy Apple. Why? Because Apple, it's a trend. It might go down, it might go up, it might go down and up, but there's a trend. I know Apple's going to be there, and they're going to always have a very good products to sell from TV streaming services, smartphone. And today, Apple have a deal with Kia to have a EV car, autonomous driving. So even if you bought Apple for a high price, I don't think the price of Apple is high, but even if it's high, just wait a few quarters and your money will be back with this very good return. But Bitcoin, no, there is no trend in Bitcoin. There is no after a few quarters, the company will keep gathering income. Again, go to the fundamental. Bitcoin is not a company with earnings. It's, as Tom said and Ray, it's a speculative things. If there is a trader from the other side willing to pay you 50,000, then the price is 50,000. If there is nobody from the other side willing to pay that, then the price is going to go down till to find the first buyer to buy it from you. So volatility here, what type of people are going to give you the high prices?
Great, thank you. So I just want to thank our audience for these amazing questions. I do have a few other questions for our panelists. So kind of like before, you kind of ask individual type questions, and if anyone wants to kind of add on to that question. So this one for Dr. Tom Brady. So social media played a major role in young people engaging in the financial markets. Do you believe this is a good thing or a bad thing?
Yeah, this is just kind of what I said previously, Manny. I think it's great. I think getting involved in the markets is just a great thing for young people, young investors to do. The key is to avoid taking shortcuts and just because you can click on something like a Robinhood app that makes it almost seem like a game, really do the research to understand what you're investing in. I just, and you know, so I just would, you know, there's lots of examples even over the last year where, so for example, last April when COVID lockdowns just happened, oil prices traded negative for a short amount of time. Oil prices traded negative. And that was really driven by a Chinese wealth fund that really didn't understand what they were investing in. They were investing in oil futures, and they didn't understand how futures contracts work. You know, they expire, there's expiry dates. They didn't understand that. Same thing last week, you know, following the real rapid rise in GameStop. The same thing, a lot of the Robinhood investors and Wall Street Bets crowd wanted to, what's called a short squeeze, to push the price of silver higher. Well, it's a totally different thing to try to squeeze a futures contract than it is an equity contract. So when you're trying to squeeze an equity, for example, I'm a short seller, or I'm shorting GameStop. I am betting that the price is going to go down. So I have to do that. I have to go borrow a share of GameStop from somebody. And if the price goes down, then I buy it back and I return it to that person. And I've sold it for a higher price than I paid for it. So I made a positive gain. Now, as opposed to that, if the price goes up, then I'm in a loss position and I have to try to buy that share back at a loss. And you don't have to do that. You don't have to borrow shares in a future. You know, I could just short a futures contract. So I think people not understanding what they're investing in, that's why you didn't see silver just increase radically like you did GameStop. You know, so it's just you know, that's just caution out there that these things happen all the time, but really be understanding what you're investing in. And again, just because it's an easy app and all I have to do is tap a few buttons on my iPhone, and next thing you know, I have options and I'm buying all these crazy contracts. I really need to understand what that is before investing.
Thank you. So on to the next question. Dr. Ray, you know, what can we expect from cryptocurrency in the coming years and the future for it?
So one thing I'd expect is there's so many different kinds. We'll probably see some competitive forces in the cryptocurrency space and see some of these kind of fade away or disappear. There's no room in really our interest for this many different kinds of cryptocurrency. I suspect that a lot of the future of cryptocurrency might depend on their ability to make it more likely to work as a currency. So does it become easier to use for purchases? Does the technology in Bitcoin improve so that they can do more transactions, so that it's easier for you to use it as an actual currency? And then depending on whether it meets its ability to do that, we'll see its volatility might actually fall if it becomes more able to be transacted on more often and more easily. Otherwise, it would probably continue on kind of this super volatile path.
Yeah, if I could kind of, you know, some of my thoughts that on the future of cryptocurrencies.
Definitely.
So right now, you know, the real advocates behind cryptocurrencies is that this is going to turn into some kind of money. This money is not going to be at the whim of something like the Federal Reserve here in the US, or the Bank of England, or the Bank of Japan, where they can print money and take money out and manipulate the value of the US dollar, for example. Now the problem, what I see, is that you're never going to see a government or a central bank, or a government in particular, for you to allow for you to pay your taxes in Bitcoin, or receive entitlements, you know, if it's Social Security or any other entitlement benefit You're not going to receive that in a cryptocurrency. The reason for that is that if you think about how a government manages an economy, there's two things. They can do fiscal policy, so they can spend more on, say like for infrastructure projects, that, you know, we're going to spend more on maintaining and building highways. That's going to create jobs. So we can stimulate an economy doing that. We can also use something called monetary policy. So we're going to put money into an economy, and by manipulating short-term interest rates, and take money away. And by allowing another currency in there, like a Bitcoin, that really doesn't allow for monetary policy. So I just never see a government allowing that ability that they cannot manage the economy through short-term interest rates or monetary policy going forward. So that's my, and I think it's just going to remain a speculative asset with lots of volatility, as Ray said.
Definitely. Thank you for your answer. I don't know if Yosef would want to add on.
Yes, I think this is a spectacular question you asked. You asked, what's the future for cryptocurrency? If this session was a year and a half ago or 2 years, the question will be, is there a future for cryptocurrency? So your question is already an answer. So the question is there a future for cryptocurrency, or is going to die like other things? The answer is no. From what we see now, there is a future for the cryptocurrency. Now, what is the future is interesting. That's very hard to predict in this dynamic world. So I think this is your question is spectacular, very important. What's the future? Now we established the fact that cryptocurrency is going nowhere. It's going to stay, because Warren Buffett, he discriminated. He says there's no, it's going to die, it's going to go, but he was wrong about that. And then what's the future is determined many factors. Now again, we have to understand digital wallet, cryptocurrency, speculative stocks, investment, millennials, Z generation, all this coming together, and it causes a lot of confusion here. Digital wallets can be happen in a few years, maybe if Libra, Facebook with PayPal, if they're a project with Libra become to be happen, then cryptocurrency will be big trouble if that happen, because from my understanding, Facebook is going to push hard to have Libra currency, and they're going to work with PayPal. PayPal will withdraw, and then they work to Bitcoin. If they come back, then the future for Bitcoin will be tough. They're going to have a tough road. If not, then I see the future for Bitcoin will still as a speculative asset.
Sweet. Thank you guys so much for those answers. So we're just gonna kind of roll back to this one question. I know we kind of already talked about this, but we're gonna kind of talk about this like in a group. Our last question. So I know like this was like the talk of last week in the news, the headline news during last week. But you guys kind of break down, what's going on with GameStop and why experts are saying, this is history in the making. If anyone feel free to.
So GameStop, let me jump. It's behavioral finance. I'm professor of behavioral finance. So what happened is a short squeeze. That's what happened. And a short squeeze happened. A lot of Tesla happened to a lot of companies. But who steered the boat is Elon Musk. He went to Twitter and he put GameStop. So it was a 94% short squeeze. When Elon Musk put his tweet, they got another 64% after hours. So for example, I sold, when I did 128%, I sold. I make a lot of bucks from that GME. So this is what happened here. So the price went 200% in a few hours, like from the market close till the after hours. The market closed at 2 o'clock Mountain Time, but there is after hours till 6 o'clock PM Mountain Time. So they keep trading on it, and they got a boost till that. Then what happened is Robinhood screwed up. So the effect should be 2 days, short squeeze, and the next day to go down. We have a lot of short squeeze. I have that with Costco, short squeeze, good companies. Costco had it. Tesla had it a lot of time. Walgreens, it's a small company. Again, they have a short squeeze. It's typical to have it. Now, Elon Musk did that. And the worst, when Robinhood limited investors to trade GameStop, the price went down. And then the investors complained. Then Robinhood reversed their decision. The price went up again. That's what happened. It's Elon Musk, Robinhood. It should be a normal short squeeze, but we have it a lot. Usually on a Friday evening. If you want to watch this short squeeze, watch it tomorrow at 1:30, 1:35. When the price starts going, people close position. Hedge funds want to go for vacation the weekend, they're done. They want to close their position, go back to cash. This is the time where short squeeze happen. And then Elon Musk and Robinhood, and now the price going down. I just want to say something fair here about GameStop. I looked at their financials today. GameStop market cap is how much is it? 5 billion. 5 billion. GameStop is, I'm just going to give you something you cannot see it all in the classroom. Their market cap is a 4 billion now, 4 billion. Their revenue is 6.5 billion, their revenue. So they're less, if you calculate the value of the company by the revenue, they're less than one. And that's very cheap, very cheap. The company is cheap. And they're 40% down today. Apple, if you look to the Apple value versus the revenue for Apple, it's 8. Like the price 8 times the revenue. This company, GameStop, is less than 1. So valuation is a cheap company, but because the short squeeze and the short sellers, there's not a lot of pressure on it. And that's what takes us to Ray and Tom Brady point that why we have a short in the market, why we allow people to sell the stock, why to short. That hurts company and put the price under pressure.
I think that's, but short, having short interest in a market, short investors, they really help determine value. I mean, if there was no short sellers, people wanting to sell, what's just keeping prices going up and up and up? Because everybody's, there's got to be a view that I really think this company is overvalued, even if it is, like Yosef, that it's $6 billion in revenue. I still think all the other things, their costs are too high. They're, I just have a fundamental view that it's not a valuable company. So that has to be the ability to have for me to take my view that it's overvalued. And
yeah, but we saw that, Tom. That's a great point. I like that. We saw that with Tesla. Tesla was under pressure from short sellers. And Elon Musk was in Twitter also, did not help in Twitter activity. But when they have a breakaway, all the short sellers, he destroyed them. He's the gladiator, Elon Musk. Tesla was in the pressure from short sellers from 2012 to 2019, early 19. We're talking about 7 years, the price was under pressure from short sellers, and that add confusion to the market. We have something called noisy traders. Noisy traders, people who trade based on no knowledge, no information, just want to trade. And the short sellers add a lot of the confusion and the pressure in Tesla. Then Elon Musk, with the breakaway of Tesla, I bought the share of Tesla for $84, now $840 and $800. They reached $900. And I thought this is cheap. The only reason the price was down is because short sellers, when they break away, a lot of investors losing money. I closed the year 2020 with a return 140%. I closed the year. A lot of people closed the year with a negative. Not the market did 10% or 8%. Why? Because they went short selling for Tesla. It's risky. It's add confusion to the market. And as Tom said, there are the Chinese didn't understand the futures market in oil and the price went negative. So you want to have a little bit safe environment that people understand what they're buying and not to add confusion and add volatility to the market. So I agree with you. It's a great question, Manny.
Go ahead, Ray. I mean, I just have a view that the short sellers that lost money maybe when they were shorting the stock last week at this time, and it was maybe it was around $30 a share. They probably covered it. They bought their shares back, and then they probably shorted the stock again when it got up to 350.
Exactly, it's a whipsaw. It's a whipsaw, exactly.
But their view is that the price is way too high. I'm gonna short this stock because it's unjustifiably high, in my view. So
I think part of the question about the whole game top situation is, do we expect this to repeat itself? Do we think that, is there going to be like a Reddit-based short squeeze police that's going to just be tracking who is, looking at firms and just like, where the short is 94% of the number of outstanding stock or something like this, right? Where there's just going to be this like pressure publicly driven to keep this happening. And I just don't think that's a realistic expectation. I can't imagine that there would be enough public attention or enough capitalization to make this a pattern. So if this is just like an incident, I think it's a cute story that is going to be in textbooks forever. But is this actually going to turn into a pattern that we should drive policy or behavior or expectations from? I think is unlikely.
Yeah, I would agree with that, right?
Great. Do we have any final thoughts before we conclude this hot topic discussion?
I want to close with one word: fundamentals.
Yes.
Please, whoever listened to this, write the word fundamentals. You should buy something based on fundamentals. Not my friend told me this and. Just buy something that you understand. Apple is a smartphone company, is a service company. They have Apple TV. Yeah, I should buy it. PayPal, I have it. You have it. PayPal is a company, real company. They have earnings. They have, they've been there. I'll buy it. Facebook, 2 billion eyeballs they have. Facebook, over 2 billion people use a Facebook through Instagram, WhatsApp, or inbox. This is a real company. Just go buy those based on fundamentals and don't listen to the noise left and right. Always we have a GameStop. By the way, I have a fund manager from New York called me about GameStop. And I told him, look to something called Funko. Funko is another company. Let me put that in the chat. I put it to Manny, and Manny can share it. Funko is a company that have a GameStop story. They went from penny stock to $30, and then they went down to back to their misery. No fundamentals, nothing. It's a flavor of the week. You go up, they go down. You need to buy real thing, fundamentals. That's my quick word.
And I would kind of say that, yeah, there's a lot of very interesting, Yosef talked about fintech going on with cryptocurrencies, the blockchain. Can you track, that can be used in lots of different parts of the economy, lots of different companies. I honestly, I would see our own U.S. government. We're probably going to have some kind of digital currency issued by the U.S. Federal Reserve at some point in the future. It's not going to be decentralized like Bitcoin and some of these others, but it's going to be, taking advantage of all the advances in finance and technology. It's some of these pieces are definitely going to be with us.
Great. Thank you guys so much. I would like to give a huge thanks to all our panelists. You guys made this hot topic very informational and educational. And those who tuned in, our next hot topic will be on Wednesday, February 17th, and we will cover the topic of pandemic bets. We hope you guys could join us then at our other virtual events. Follow us on Facebook, Instagram, to stay updated with reminders of all the events we have planned for this semester. Thank you guys again so much, and enjoy the rest of your guys' day.
Take care, everyone.